The amount of negative sentiments that is associated with crypto, it is just unparalleled. So I cannot take on 100,000 trollers, and there is no need for me to do that. I am investing my money the way I like, and you have entire freedom to do it the way you like. Now that is the beauty of investing, that there will be asset classes that you would not like, and there will be asset classes that I would not like. Hi everyone, welcome to today's video. So take a look at my mutual fund portfolio. I have built this portfolio this year itself, and I'm sitting on a 5% profit on it. Mind you, this year has been really bad for investors. People have generally lost money, a lot of problems in the stock market, a lot of volatility, but my mutual fund portfolio is in green. What exactly do I hold in my mutual fund portfolio? I will disclose it subsequently on the video. Second key point, my stock market portfolio, which is much bigger than my mutual fund portfolio, it is also in green. My real estate portfolio, I have been buying a lot of real estate, and I have received so many messages that, you know what, we'll buy a villa at a higher price, please sell it to us. I have zero interest in selling my real estate, but theoretically it is also in green. Next, even my crypto portfolio is in green. Now, I'm not here to beat my trumpet that, you know what, I've made a lot of returns, this, that. That is not the objective. I have made a lot of mistakes this year in terms of my investing. So what I'm going to do on this video is that I'm going to pick my portfolio. I'm going to discuss where have I invested and why. What are things where I've made mistakes? What are things that I've done right? So I will present an overall analysis. My viewpoint is not that you should go and invest your money in real estate, bond, stock, this, that. That's your call. However you want to design your portfolio, please do. It involves a lot of steps. So I'm not here to push you. Please pick this video as a case study, learn from it, learn from other investors, and whosever investing style you like the most, go ahead, pick learnings from them and imbibe in your investment strategy. That is the viewpoint with which I'm making this video. And also a very big shout out to our sponsors for today, which is Golden Pi. It is India's #1 bond investing platform. You will see a series of listed bonds. So in case you are interested in investing in the bond market in India, you could consider Golden Pi. So more about them subsequently on the video. Okay, so let me first and foremost discuss my overall portfolio size. No, I will not do that. I'll let you guys guess how big my portfolio is. It's always a fun exercise for me. So let me speak in percentage terms, but more importantly, let me help you understand where broadly I'm investing my money and why. So this is what my overall portfolio looks like. It's a few $1 million for sure. So stocks, I have roughly 70%, and out of 100 rupees that I invest in stocks, 80 rupees I invest in Indian companies and 20 rupees I invest in the US companies. Now, why have I picked the US market? Why not China market, Europe market, this, that? Because I can only understand the Indian market and the US market. Therefore, I take positions in these two markets only. So I hope this point is clear. Now the specific breakdown of asset-wise portfolio I will give subsequently on the video. As to what type of assets do I own within the stock category, I will disclose that very transparently and you will get an idea. But let me take you through overall contours of my portfolio. Then comes bonds and cryptos. So bonds I would have 5% position, and cryptos right now somewhere would be around 10 to 12. And if you have been watching my videos over the last several years, I have consistently made the point that I invest between 10 to 20% of my money in cryptos. I have continued to do the same. Now I can already hear people clicking their keyboard that crypto, this, that, no fundamental value, poisonous asset. See guys, I'm not here to argue with you. If you like crypto, go and invest. If you don't like crypto, don't invest. I am an investor and I can have a very different viewpoint compared to a lot of other investors. That does not make them right and me wrong, or vice versa. I hope that whatever conversation I am having, in order to keep it transparent, I have to disclose how much money I am investing across different asset class. So please take it with that spirit. I am not pushing you to invest in crypto or any other asset class for that matter. Okay, moving very quickly, that real estate, I have 15%. Now, many of you have been commenting that Akshat, you have recently started buying real estate. You were not buying real estate before. Okay, I will link a video in the description and comment box that was released sometime in November of 2021, where I have shown my commercial properties. So definitely I would have purchased it 8-10 months before that for sure, right? So I've been investing at least in public on real estate projects since 2020. That is in public, right? And even before that, I've been investing a lot of money in real estate, even before I came on YouTube. So I hope that this gives you a sense of my overall portfolio, how it is being designed. Let me very quickly state a very important point as to why am I a diversified investor. The reason there is very simple, that I feel that asset class moves in cycles. For example, there will be a cycle when real estate is performing really badly. So the last 10 years have played out that way, that real estates have given really bad returns. Does it make real estate investing really bad? According to me, no. You can have a very different viewpoint. Similarly, the stocks would have up cycles and down cycles. Similarly, you will have bonds that will have up cycles and down cycles. Therefore, I'm diversified and I invest money across different asset classes. I'm not changing my tune. Go back, watch all my videos even 2 years back. I was saying exactly the same thing. Second is that the split of the money that I might invest across different asset classes would change from time to time. Why is that the case? Let me quickly explain by picking real estate as an example. So right now I'm very bullish on the real estate market. Now when I say that I'm bullish on the real estate market, that does not mean that I'm bullish on like this Gurgaon based real estate or like Noida based real estate. I am bullish about real estate market that I understand. So I feel that the real estate that I'm purchasing right now, or the type of real estate that I'm purchasing right now, it will give very good returns. So I'm putting little bit more money here, right? A few years back, my portfolio here would have been between 5 to 7%. My stock portfolio was roughly 80%. It was 5-7%. Now, right now, because I see some opportunities in the real estate market, like any logical investor, I will divert some of my money from here to here. This does not mean that I have become bearish on stock market or something like this, because if I were bearish, why would I hold 70% of my money in stocks? So I hope that all these basic points are clear, that I invest across different asset classes. I am a diversified investor. And finally, I will go as per the opportunities that I see. Now with that viewpoint in mind, let me start discussing individual asset classes, and let me first and foremost discuss bonds very quickly. So first and foremost, you might have an obvious question that Akshat, you are a type of investor who is slightly risky. So also I'm a risky investor because I tend to put my money in aggressive growth instruments. So I'm slightly risky. Then why is it that I'm going to the bond market? Okay, so let me very quickly explain that. See, the nature of work that I do, it's freelancing. It's mostly entrepreneurial work. So there is a lot of uncertainty regarding my work. It might happen that in 2 to 3 years time, I might not be making any money. So I need some kind of safe money that keeps me going. So bond investing for me is that safe money creation. Now people who are new to investing might not understand bond completely. I have done several videos in the past. I will link it down in the comment and description box. Please go and watch it. But very quick recap in 30 seconds what bonds are. So basically, if you go on Zerodha or if you go on Upstocks, then what happens is that you end up buying equity. Equity means shares or stocks. So what you will do? You will go and buy equity. Now equity as an asset class is riskier. Now why is it risky? Because in the event, hypothetically speaking, if Reliance goes to zero and if their assets are auctioned, then who gets paid first? Well, the other asset class people get first, and that is called as bond investing. When you go and invest in a bond, what is it that you're doing? You are essentially giving a loan to the company. First and foremost, the loan givers are going to get paid first. So therefore, bond investing is slightly safer form of investing. Now, I'm not saying that all bonds are safe. Then you just simply go sell your house, put all your money in bonds and ho gayi chutti. No, it's not like this. You have to understand the bond ecosystem entirely. Again, I will link one of my videos where I've done that. Please go and watch it. It's a very useful video. You will understand it in case you want to pick bonds as an asset class where you wish to invest. So then comes the natural question that, okay, fine, we understand that you invest in bonds because your job is such that it is not safe per se. So you need a little bit of safe money. Therefore, you're locking away 5% of your money in bonds. Makes a lot of sense. Now, what type of bonds do I invest? So I typically invest in two different types of bonds. The first is called as GSEC or government securities. So what is the meaning of GSEC? GSEC simply means that these are government bonds. Now, what are government bonds? Government bonds, for example, let's say that government has to go and build like a lot of bridges. Now, I've drawn a horrible drawing of bridge, but let's assume that this is a bridge that government wants to finance. What government is going to say is that, hey, here is a piece of paper. You take it from us. You give us 100 rupees and we write on this piece of paper that after 3 years, we are going to pay you instead of 100 rupees, let's say 121 rupees. So roughly you are making a 7% interest rate on this bond. So what are you simply doing? You are giving a loan to the government. Now, if you are buying GSECs, these are called as government securities. These are typically the safest type of bonds in which you can invest. Now, because you are investing your money in safer instrument, what is going to happen is that you are going to get less amount of returns. So this is the trade-off that is there, that if you are taking lower risk, then the returns that you will be getting are low. So you have to make a call how much risk to take, how much returns you can expect. So I hope this point is clear. Now, how exactly to buy GSECs or government securities? I have shown it on one of my earlier videos. I will link it down below. Please go and watch it. You will understand how to exactly buy it. Now, the second type of bonds that I invest my money is called as corporate FD or corporate debt. So these are two slight different variants. So what is the exact meaning meaning of corporate FD? Well, in very simple terms, you might have heard of bank FD. That if you go and put 1 lakh rupee in HDFC Bank, after 1 year, they will give you 1.07 lakhs. Because 7% around is the FD rates in bonds right now. So similar to bank FDs, corporate companies, for example, here you can see that there is a corporate company called as Bajaj Finance Limited. Now, this has a corporate FD option and you can invest in it in case you are considering investing in Bajaj Finance corporate fixed deposit via Golden Pi platform. And you can check all the details here that if you go and invest 2 lakh rupees, then the interest rate will be 7.67%. On maturity, you are going to get this much amount. Now, if you are of the opinion that Bajaj Finance will go to dust, it's not a great company, then of course this becomes a risky investment option. But on the flip side, if you think that Bajaj Finance is a very good company, it's extremely unlikely that in another 4-5 years it is going to go under, then doing this FD might make sense. Now, how do you exactly check how safe or how risky a particular investment is? You can go and check the rating agency's verdict on it. So here, if you click on Bajaj Finance, you will clearly see that it is a CRISIL AAA rating, which is considered to be stable. Now it is your call whether you trust CRISIL or not. But this is definitely an option that you could consider. Now, another related option is that you can go and buy listed corporate bonds. So here, if you press the Explore tab, you will see a series of options and out of which you can buy a few in case you are looking to build a bond portfolio. Now, I'll not take you through all these options. You can go and independently verify. If there is enough interest, I'll make a live investing video in the bond market. Now comes the final point regarding bond investing. See, right now what is happening is that the interest rate in the economy is fairly high. So the type of deals that you're getting in the bond market, those are lucrative. A simple example to understand here would be that if you would have done a fixed deposit, let's say around 2020 July, August, the HDFC Bank would not have given you more than 5.5-6% interest rate. Now they are giving roughly 7%. Why are they giving you more returns now? Simple reason is that because the interest rates have gone up, therefore the FD returns have also gone up, and therefore the bond investing returns have also gone up. All you simply need to do is that pick the right type of bonds. So that is the message that I will leave you with. Now with that said, let me walk into the other asset class, which is the stock where I have the most exposure. So within the stock segment, this is what my Indian stock portfolio looks like. That roughly 40-50% of the stocks that I have are in finance domain only. Now, is this a risky strategy? 100% yes, this is a very risky strategy because finance stocks are generally volatile. Now, if the markets fall and if there is aggressive correction, then of course I'm going to lose a lot of money, notionally speaking. So that is the risk that I run. Now, because my portfolio size is very large, for example, take a look at this, that I have close to 1 CR on just 2 stocks. So my portfolio size is fairly big. So from that perspective, it is important for me to hedge, and therefore I do options hedging. Now, how exactly to do? That is something that I will teach on my stock market course. Now, in case you are interested, you can check more details. It only makes sense to do options hedging if your portfolio is big. If your portfolio is not big, please do not get into the options game. That is my simple and honest advice to you. Now, back to topic, that as to why do I hold so much of finance and what type of finance stocks do I hold? So I own tier 1 or tier A category banks. I also own A category bank would be something like HDFC Bank, Axis Bank. I have a lot of money riding on this. On top of this, what type of banks do I hold? I also own B category type of banks. For example, I am holding a lot of PSU stocks right now. Punjab National Bank is one of my biggest bets there. I also hold a lot of small finance banks. For example, Equitas Small Finance, AU Small Finance. I have made videos on all of this in the past. It also includes insurance companies and AMCs. So these 3-4 categories would be my top categories if I have to break down my portfolio. Then comes the second category, that right now I am holding roughly 20% of mid cap and small caps. What I'm going to do is that as the stock market starts recovering, I'm going to pull out roughly 50-60% money from my mutual funds, and I'll explain it to you why. I keep on narrating whatever I'm buying, selling on the member community tab. So I will reveal more information as we go along. But very quickly speaking about some of my small cap bets. One is Delta Corp, that is a stock that I had already purchased. There is another called as Lakshmi Machine Works that I've already purchased. There is another stock that is called as Kaya, which I had purchased recently, and it gave like a 20% run up, and someone accused me that you're manipulating stocks. So I had written an entire community post around it. And also a very quick note that this is not a push from my side that you also go and buy similar stocks. I'm simply trying to tell you that I hold 20 to 25% of my portfolio in small and mid cap stocks. Why? Because I'm very very bullish about small and mid cap category and also on consumer durables right now. Now this includes companies like Havells, Whirlpool. I have started to build more position on Page Industries. So all these different stocks which are consumer durables, this is something that I'm putting my money on. These two things, mid and small cap and consumer durables, are opportunistic trades for me. You would have a natural question that, Akshat, are you not investing in Indian tech companies? The only tech bet that I have in India is Zomato. I'm not purchasing anything. I used to have TCS. I swung traded and I was able to sell it off at good profits and I am out. Whatever money I made, I have invested in Nifty. Which brings me to a very important point about mutual funds, that as to what type of mutual funds am I holding, or mutual funds or indices I am holding. So I am holding Nifty IT, right? All my Indian IT bets are with this. I do not have even one single IT stock in India. I have been a big advocate of the fact that I will not own Indian IT stocks. And I'm glad that my bet turned out to be right. Now within mutual funds, I own Nifty 50 type of mutual funds. You can directly buy an ETF also. How do you exactly buy an ETF? You simply go on your trading account and buy an ETF. It is called as Nifty Bs. Similarly, for Nifty IT, you can buy ITBs. You can buy it directly as a stock on your trading account. So majority of my mutual fund money is directly in index. It's not as if that I'm buying like a lot of small caps and mid caps and all that stuff. Very little I would have there, but almost 90-95% of my mutual fund money is with these type of indices. And what do I plan to do next? As the market starts to recover, I'm going to pull out this money and put it here. Now you'll say, yaar, aapko ye karna hi tha, that you had to do this, then why did you get into mutual fund to begin with? See, no one can time the market for sure. That I cannot tell you that growth is 100% going to happen 6 months from now. Neither any of the investors. I want to stay invested in the market. Right now, let the situation get cleared out. I do not feel that the markets are going to correct quite aggressively. I do think that the markets are only going to rise. Right now, we are in a sideways movement. So in order to hedge my risk, what I've simply done is that, hey, stay invested in the market and let the market go up during that time. In case if I'm not able to transfer my money from mutual funds to here, still I will be making decent amount of returns. Now, in case the market falls, it's fine. I will continue to hold my mutual funds. Not a problem there. In fact, I will aggressively invest more money here. So that way I will be able to downward average it. So I'm just waiting for a very clear indication which direction we are moving, and accordingly I will hedge my bets. Okay, so now comes the final segment, which has to do with US stocks. Now, all of you already know that I am a big believer in US tech. All my tech investments are in US oriented companies. This includes companies like Meta, Google, Amazon, and I got so much bashing. You know what, Facebook, you had recommended Facebook, Meta, this, that, it has fallen. Now take a look at Meta. So I continue to hold big tech companies. I am not holding those companies for 5, 6, 7 months. People start creating a lot of noise if the stock goes down. No one can predict the short-term movement of a decent stock. If the company is good and if I'm clear about my strategy that I wish to hold something like Meta for 3-4 years, I would put a lot of money and sit tight. So that is what I've done with big tech companies. My portfolio is almost built, so I'm not putting any more new money there. Now, very recently, I have started to take some positions in AI-based companies in the US. I will discuss that tomorrow on the member community section of YouTube. In case you want to learn things fundamentally, you can definitely consider joining that. And tomorrow, I'm going to present a detailed overview on AI stocks. So in the US, I hold 3 types of different stocks. One is big tech like Google, Amazon. Second category would be emerging companies. For example, I have UiPath, I have Airbnb, Shopify. So these type of companies. Third and finally, I own companies which are in the AI domain. So I've just picked 2 as of now, and I will see how the space is evolving, and accordingly, I will pick more. Okay, so now comes the next segment, which is cryptos. It hardly generates any friction in the market. No, I'm just kidding. Almost everyone has like polar opposite opinions on cryptos. See, I have already made an announcement roughly 5-6 months back now that I have moved all my money to Bitcoin in the crypto space. Earlier, I used to do Ethereum and Bitcoin. Now I am only 100% Bitcoin. That's it. Now, after that, I started getting a lot of heat that you are encouraging like, illegal trading. You are encouraging like this, that. This is not a push from my side that you go and invest your money in Bitcoin or whatever. I'm simply transparently sharing my portfolio. And if you take a look at Bitcoin performance over the last 6 months, it is doing fabulously well. And again, I'm sitting on green on my crypto portfolio. Now, many of you would say that how are you buying cryptos, this, that. I'm not here to debate which platform to use, whichever platform you like. So please go and invest via that, and please learn about safe storage. I'm going to speak about cryptos more strategically here. Number one, cryptos have no fundamental value. That argument has been there for some time now. If you believe in it, well and good. If you do not believe in it, don't invest in cryptos. It's as simple as that. There is a community that believes in the power of cryptos. They are definitely taking cryptos up. If you want to be a part of community, join it. If you don't want to be a part of that community, don't join it. There is no compulsion that you have to put your money in cryptos. That's one. I have already explained my rational analysis of Bitcoin, but problem unfortunately with the retail segment is that most of us do not even understand the difference between cryptocurrencies and Bitcoin. We consider everything to be the same. For example, it is like me saying that, you know what, that a Fuddu small cap stock is equivalent to entire stock market in India. No, there will always be good things within an asset class and there will be a host of bad things within an asset class. As an investor, it is your responsibility to investigate what type of asset suits your profile and personality. So that is the conversation that I'll give for people who wait for my crypto commentary. Unfortunately, I cannot make, right? Think about it this way. The amount of negative sentiments that is associated with crypto, it is just unparalleled. So I cannot take on 100,000 trollers and there is no need for me to do that. I am investing my money the way I like and you have entire freedom to do it the way you like. Now that is the beauty of investing, that there will be asset classes that you would not like and there will be asset classes that I would not like. My goal as an investor is to figure out strategies that work for me and therefore Bitcoin also suits that strategy. I'll not speak quite extensively on this topic, but very quick updates on Bitcoin. Bitcoin is very much legal across major economies like US, Canada, European Union, Australia. So a bunch of countries are supporting cryptocurrencies. Now, second key point, that a lot of regulations are coming for cryptocurrencies. When I say regulation, it does not mean negative things. In fact, if cryptocurrency space gets regulated, it's actually very, very good for investors. It will give legitimacy to cryptocurrencies. Problem right now is that many countries, including India, are not taking a stand. Please take a look at this snippet. You yourself will understand the argument. Many people take a moralistic perspective कि cryptocurrencies गंदी चीजें होती हैं, terrorism, financing, this, that. Okay, so you tell me what is so good about alcohol, tobacco, and gambling apps and whatnot, right? So the point is that the government needs to figure out how they can make money from cryptocurrencies. The moment they are able to figure that out, they are going to regulate it and participate in that money making game. So that is the conversation that I will give. And final very quick point about cryptocurrency is that, see, think about it this way, that they have been regulated. A bunch of negative stuff has already happened in the crypto space. Why has Bitcoin given almost like 50-60% run up in the last few months? I am very happy to listen to counter arguments. So with that said, let's move on to the final asset class, which is real estate. Number one, am I diverting my stock market money into real estate? No, very little, just for opportunistic perspective. But going forward, I'm going to pour in more money on stock market also. Second key point, that what type of real estates am I buying? I'm buying villas here. Earlier, I used to say that, you know what, you should not buy houses, this, that. So have I changed my opinion? No, I still don't own a house. Now, whatever villa I have purchased, it is on Airbnb. Again, please check the links in the description and comment box. I have spoken about it quite extensively. So basically, I'm still investing in commercial properties and commercial properties only. Yes, there is a flat also that I have purchased. Again, the point is that, you know what, you have purchased a flat, you are against flat. Why that? Okay, because it serves dual purpose. One, I can create an office there, and it does not cost crazy amount of money to buy a flat in Goa. Second key point is that even that flat can be converted into Airbnb. Now, final point, what are my views on the real estate market? I feel extremely bullish on the real estate market. If you are purchasing very good properties, if you are building businesses on it or using it for commercial establishments, very, very good to buy real estate right now. Which states, which city, what type of real estate, I cannot give you all that commentary. Why? Because real estate is a highly local subject. Someone sitting in Gurgaon and commenting on Goa real estate market, that is just nonsense. Please do not listen. Similarly, please do not listen to me if I start preaching about what to do with your Gurgaon real estate property. I would not know anything about it, simply because I do not have practical exposure to that particular real estate market. Please remember the point that real estate is a hyper local game. There are a bunch of points that I have explained that you can apply as general rule. For example, one of the points that I have explained is 4% yield rule. For example, if you are trying to buy a flat in Bangalore, then please run a computation, right? For example, if you're getting that flat for, let's say, 2 crore rupees. Now, what is the 4% yield rule says? It says that you should be making roughly 8 lakh rupees, 4% of 2 crore. 8 lakh rupees you should be making on yearly basis from that. Either you can rent it out or either you should be able to save 8 lakh rupees of rent. So I hope that by doing this basic analysis, you will at least not purchase an overinflated asset, because I've seen people buy like really ridiculous real estate where the real estate is like 5 crore. They are buying it and giving it at rent at like 50-60,000 also. So that unfortunately is not a very healthy use of the money. So in summary, there are 3 points that I will leave you with, and I will speak about some of the mistakes that I've also made. So first key point that I've learned is that you need to understand your risk appetite. If you have no conviction on Bitcoin, or if you have no conviction on real estate market, avoid kar lo. Why are you jumping into it? Don't do it. It's as simple as that. If you are taking little bit of risk, start with little bit of risk. If you understand the space, invest a lot of money. It is completely your call. You need to understand how much risk to take. The higher the risk, the higher should be the potential gain, and please be responsible for your own money. What I'm seeing in the market is that, you know what, some YouTuber said this, I purchased, now you are responsible for my money. Now tell me this, a lot of people watch my video, they made money on HUL, they made money on Punjab National Bank, they made money on AU Small Finance, JP Power, vagera. I can tell at least like 10-20 stocks. Then how many of you shared your profits with me? I'm saying like very logical thing. Now I know that a lot of people will comment that, you know what, we lost money on NGL, we lost money on Amritanjan and these Falana Deemka stocks. Now okay, please go and listen to those videos again. Now I know that I'm going to get a lot of heat on HDFC AMC. I'm still holding the stock. Here's the stock market performance. Look, last 6 months, it has started to recover. NGL, Fine Chemicals. Again, I'm holding it. I have not sold it. Amritanjan, I'm holding it and I plan to hold it. The important point I want to drive home is that, see, any investor, including me, if we are taking 10 bets, maybe 5 or 6 will go right, but you design your portfolio in such a way that overall your portfolio gives returns. When the bull run is underway and you are able to ride the entire bull run, that is when you will end up making crazy amount of money. That is the period where you should be booking the profits. This is something that I convey on my YouTube member community also. If you want to learn things fundamentally, please consider joining it. Don't follow half the video and make your purchase decisions. And you again, please go in the comment section. You yourself will see that, you know, there are people, if I talk about 5 stocks, they will skip half the video. They will go, acha yaar, you helped me save my time, because someone had commented that, okay, these 5 stocks Akshat had spoken about. They don't even know, am I buying, selling, holding. They will just 5 stocks, now aa gaye. Tomorrow I'm going to sell my house, all money in these stocks. And if I do not make money, Akshat is responsible. So this is the attitude with which a lot of people operate, and it is completely wrong. I am saying this for your own benefit. Please listen to the video carefully. Please understand the logic. Then go and find contrary opinions. Whosever opinion you like, make notes, and finally use your own intellect in order to make buying or selling decisions. Second key point is that you need to learn how to build positions. This is an error that I also made with a stock like HDFC AMC, that I purchased most of it too early. So that was a mistake from my side. I completely acknowledge it. Had I not made that mistake, and if I would have aggregated my position on HDFC AMC slowly, I would have been sitting on green on that. Third and final point, you need to understand the essence of the strategy, whatever you are implying. For example, if you are investing your money in real estate, you must see a very clear strategy. Yaar, I'm buying like real estate. Can I convert that into a commercial real estate? Can I build something on it? Or can that unit be converted into a shop? So there is a very clear strategy that you're purchasing real estate to convert it into commercial. So that's a strategy. Similarly, in stocks, your strategy should be very clear. Ki, acha, I'm not buying Indian IT stocks. Why? Because I'm building my positions in the US tech. So therefore, I don't need any tech exposure in India. So all this is called as portfolio design. So please learn about it. Finally, it is very, very important to be opportunistic. Right now, there has been so much negative sentiment about US banking system, European banking system. Even JP Morgan clearly said that, you know what, kuch risk aa gayi hai, right? And banks are going to fail. And within a few days, they posted record profits and all the banking stocks started shooting up. The point is that as retail investors, we go by news. I keep on reading my own comment section and people are like, yaar, US mein recession aa raha hai. Bhai, how long has this discussion been going that US mein recession aa raha hai? Do you think that it will impact the market now? Now, of course, markets can fall for different reasons, but do you think that because of recessionary concerns, the markets are going to fall now? So I hope you got the point that all these different things you need to understand. You need to apply your own logic and brain. I hope you enjoyed and benefited from this video. If you did, do press the like button and I will see you soon.